If you're watching and you're thinking about doing SBA, I describe it sometimes as a financial colonoscopy. 40 years ago, a toaster toasted bread at the same, to take 6 seconds or whatever. Toasters haven't improved in speed, and neither has getting an SBA loan done.
Where we are right now with the SBA is...
This is Neal Isaacs, the Raleigh business broker. I am super, super excited to have another guest, another subject matter expert, another smart person to pick their brain and interview and bring to the people that watch this show. And my special guest today is Heather Endresen. And Heather is with Viso Capital. She's been in the business for 30 years, but 13 of those years have been exclusively SBA. And she does biz acquisition. She's biz ac focused. You can do a lot with SBA, but she lives and breathes the biz acquisition SBA, which is why I'm super excited to talk about Heather. I met her when she was at Live Oak Bank, which is one of the big boys in the market. And now I'm really excited to dig into what she's doing with Viso. So we've got a great slate of topics to get into today. But first, I just want to welcome you. Thanks for joining me today, Heather. How are you?
Well, thank you for having me and for calling me a smart person. That was really nice.
Yeah.
I hope I live up to it. I'll try.
Well, I've organized our conversation here into a few different categories. I'm just going to call it perspectives, processes, and then kind of we'll get into the topical things and some special topics. Mm-hmm. And we'll just kind of meander through this. SBA loans can be a little bit dry on the surface, but I think that you're an exciting person, and it's the stories that kind of make it fun. So we'll try and have as much fun as we can today. So let's just start with this perspectives, right? So you're going into doing a deal. I'm a transaction agent. I'm usually representing the seller, always representing the seller. Mm-hmm. But then you've got a buyer in there, which typically you represent the buyer. And then you've got a bank in there and a loan broker. So there can be all these different stakeholders. So, I want to kind of get your perspective is what does everybody want in a deal? Let's start with that.
Yeah, I mean, exactly. I think that's a great place to start. What does everybody want? So we are the loan broker at Viso. So we try to help the buyer interface properly with their lender, find the right lender and get the lender comfortable that they're going to make a safe loan. So the lender, let's start with their perspective. They want to be safe. They want to make a loan that gets paid back. And what that means is they want to look at, gosh, could somebody buy this business and just not mess it up? They don't have to grow. They don't have to do anything spectacular. They just have to get in and transition well and not mess it up. And if they do that, they'll be able to pay us back. Okay, that's a good loan. That's the lender's perspective. The buyer's perspective is more like an investor, right? They want to pay the loan back. That's sort of a baseline for them, but they want to grow. They want to make this business bigger and better. And maybe they have a lot of other, things that they want to get out of business ownership as well that are a little bit less financial, a little bit less tangible. But, from a numbers perspective, they would like to improve the business, make the EBITDA larger. Then it's a great investment if they're able to do that. Yeah. As a loan broker, I want to help them make their case to the lenders, and I want them to do it in a safe way. I want a good outcome. I want a loan that gets repaid too, because even as a loan broker, even though I'm not the bank, if I bring a bunch of loans that end up going bad to banks, that's not good for my business. That's not good for anybody. Yeah. So we're all about kind of safety, and the buyer's a little bit more about safety, but also some growth potential. And then, of course, you're on the sell side, and the sell side is obviously a seller that has usually been a founder most of the time, not always, but most of the time, looking to exit for some kind of reason, which, it could be a lot of different things, but often these days it's retirement, but it could be something else as well. But they're getting out of this business. They want to turn it into some cash, and maybe they want, as much cash as they can get, right? At close. They don't want to carry back a note. And they don't want to be tied to it anymore. They want to get out and convert it into some cash. So it's kind of, how do we bring all these parts together in a way that everybody's happy?
That opens up an interesting topic that I want to go down. That retiring business owner, they probably had some truck loans, but they probably started small and built it up into something big. And they're looking at their working capital, and they're looking at they know how their business runs, and they probably have little to no debt.
Yeah.
So we're talking about perspectives here. That's a different perspective than the business buyer who's saying, I'm definitely going to have some debt, right? You don't deal with this, Mr. Owner, but I need to make sure this works from a different debt position.
Yes, and that's a huge difference in perspective is that sellers often just don't understand why we're being so conservative. And it really comes down to, well, Mr. Seller, you didn't have this $60,000 a month payment or whatever it is every month, no matter whether it's a good season or bad season, a good year or a slow year. And we've got a buyer who's going to have that. And it spells disaster if they can't make the payment for
Yeah.
more than a month. So yeah, I think that's a big one, and it does impact working capital in a way that a lot of people don't think about because the seller says, "Oh, I've been able to run the company with $300,000 on the balance sheet at most, and it's fine." And that's not enough for the buyer. The buyer needs more than that because they also have this debt payment going out the door every month. And so, what I try to help my clients with on that is to do this working capital forecast, to do an actual monthly, it looks like a P&L, but at the bottom, you kind of solve for, well, what happened to cash that month? What happened to receivables? What happened to inventory? In an inventory business, it gets even more complicated. Um, and we show the bank, are there some seasonal fluctuations? What does it, where's our low point on cash? Are we going to need a line of credit? Those are all really, really important considerations for a buyer that a seller might not have to worry about because
Yeah.
they don't have debt.
And that's so important because once that buyer pulls that debt position, they have to, it's like a target. They got a working capital target, but you only have one chance to hit it because if you need more, good luck going back and getting more money once you've already, pulled that string back. So that
Yes.
working capital target is really, really important.
Yeah,
Um,
that's exactly right. You have one chance to get it right.
yeah,
When folks find out after they close that they need more working capital, they're in a bad spot because the lender doesn't want to put more
yeah,
working capital in at that moment. They won't do it. So
yeah.
it's super, super important that everybody really hit that number right. It's important to the lender, it's important to the buyer, it's important to everybody.
And I want to stay on this topic of perspectives because you're in a unique perspective, and I want to dig into Viso a little bit later. But you coming from your rich experience, since you're a smart woman, and coming from Live Oak, which I believe right now it's the largest lender in the country and has been for a couple of years. But I bet you have a unique perspective having worked for the bank and now
Mhm.
having being a broker and being able to take it to different banks.
Mhm.
You kind of talked about this originally. We talked about what the bank wants, but when it comes to safety or when it comes to like deal structure, is it different working directly with a bank versus having a loan broker that can shop for different banks? How does that play into perspectives?
Yeah, and I think that perspective of having been on the other side, having been
Yeah,
the banker,
yeah,
really helps me a lot in doing well, not only just for the buyers, but also for the bank to understand their perspective, understand kind of what they're up against in their process in getting things done. So it absolutely plays into everything I do. The banks have a tough job. They've got to make a certain amount of loans. They've got a quota. They've got to please the SBA as far as regulations, which is, there's black and white regulations and there's gray area regulations that they have to try to stay within all of those, and get to know their client and make a good loan. That is not all super easy to do. The bank's perspective is they're very excited about SBA loans because they make a lot of money. And I think this
yeah.
is something I like to share with people is that if you look at a commercial bank, SBA loans, as far as a return on equity perspective inside the bank, are the most profitable loans a bank can make. Because of that SBA guarantee, it's safer, right? So they are only going to be able to lose 25% at most.
Hmm.
And then it's also more liquid. So, you know how banks have been struggling with deposits lately ever since the Silicon Valley Bank situation?
Yeah.
Well, this is a great solution to that because they can sell the 75% portion off their balance sheet. They don't need deposits to hold against that. So it's
Yeah.
really attractive there. And then when they sell it, they accelerate their earnings. They actually get paid a premium. They get paid a few years worth of interest when they go and sell it to an investor. So, like all of those things make it extremely
It's like
attractive.
flipping houses in a way. They can turn a loan.
They can, and even premiums have, highs and lows in terms of the market there. The market for premiums is kind of low right now, but it's still the most profitable bank or a loan they can make in a bank. So that's why we have so many lenders chasing these loans, which is great for everybody.
There is a lot of SBA lending going on right now. And I'm so glad you went to this topic of infrastructure because I think the average person, including myself, has no clue really how banking works and the incentives
Mhm.
of banks. And deposits are great for banks, but I think they do like to have. Well, you've articulated how these loan products can be a kind of a juicy way for them to get some revenue on their own balance sheet, on their own P&L.
Yep.
So that is interesting. And I understand that banks have different tolerances for loans. Some may want the loan and others don't.
Right. So, they all have their own credit risk appetite. So you've got the rules, what the SBA says you can and can't do, but
Mhm.
every bank is not going to do everything the SBA says you can do.
Yeah.
They're going to say, well, we don't like these industries, or we would like more equity than the SBA requires. There's all kinds of different shades of gray in terms of their own credit risk profile. I even like to share with people that one of the key metrics when we're looking at can we qualify for a loan is this debt coverage ratio. And everyone says, but my debt coverage ratio is, 1.43 or whatever we're calculating on a spreadsheet. And I try to remind people that's directionally correct because I could send your loan to 8 banks and say to each one of them, tell me what the debt coverage ratio is, and I'll get
Mhm.
back 8 different numbers.
Mhm.
So even in how they calculate the models and the ratios, they're slightly different from
Yeah.
bank to bank. And sometimes not just slightly, sometimes it's a pretty big difference in how
Yeah.
they look at things. So they all get to kind of attack it from their own perspective.
It's funny because M&A and biz acquisition, you think it's a direct math or a science, but people argue about debt coverage ratios and people argue about how to calculate working capital. Like there's a lot of art in this. It comes down to who's comfortable with risk, and that's a subjective decision for a lot of underwriters or business buyers if they're going to do the underwriting. So it's hard to just define this stuff. What is the right debt service ratio or how much working capital? Because people have different opinions.
They have different opinions, they have different approaches, they have different calculations.
Yeah.
So yeah, for as a loan broker, that is one of the fun things. I think it's been really fun for me to step out of being part of one bank and competing against the other banks to being a broker that's working across all these other banks and knowing how each of them
Yeah.
approaches, being able to have those conversations, with a live deal and really understand each of their perspectives. And what's interesting that nobody's wrong.
Yeah.
Nobody's right either.
Yeah.
But nobody's wrong. They all have a different way of looking at it.
There's some parallels of being an intermediary. We consider ourselves matchmakers. We
Mhm.
have a listing right now with over 450 buyers, and
Yeah.
I'm sure 50 plus of them could buy this business. And we have to advise the seller to say, I know this person's saying this and they're showing this money, but I think they're going to be the one to get kind of to the finish line. Like this is the
Mhm.
best fit with the
Yeah,
buyer and the owner. And I would imagine you're doing a lot of that as a loan broker with the banks to line up the loan. This bank is have more of an appetite for this type of deal, whereas this bank, let's not really spend as much time on that one. Is that kind of how it works for you?
totally. So we first start out with this kind of big funnel and we say, out of all of the lenders that we work with, which are going to be at least they're going to look at this as a good loan from the numbers. And we go to those banks and we try to get our client multiple term sheets so they can compare. And then when they're comparing, a really good buyer will ask a lot of great questions, subtleties, which bank's going to underwrite really hard and which one's going to underwrite maybe a little softer. And depending on the situation, you might want one or the other.
Mm-hmm.
If you want the bank looking over your shoulder, really asking a lot of tough questions, you might want the bank that underwrites really in depth. Or if not, if you feel like you've done your diligence just fine, you might choose the bank that
Well,
doesn't
that's an interesting
push that hard.
perspective. So the buyer could kind of decide how much risk they're comfortable with, or if they want some guidance from the lender to kind of help
Mhm.
them with risk
Yep.
tolerance. I never really thought about that, but that
Yeah.
makes
I mean, sometimes you want that lender to be that second set of eyes and really digging into everything. And other times if you're a really great buyer and you know what you're doing with this deal or this company, that becomes more of an annoyance,
sure.
and not
Yeah.
helpful. So it is interesting how different buyers will choose the bank that way.
Well, we're squarely into the process part that I wanted to get to. So I'm glad we got there. And now we're talking about buyers going through this process. Let's talk about qualifying for SBA. I know there's the buy side and the business side, but walk us through a business buyer. What can they expect if they want to qualify for SBA?
So, a business buyer ideally has some kind of transferable experience. All the better if they actually have industry experience, but that's one of the kind of soft things that banks underwrite to are very subjective. They've got to be able to make the case that I'm the right person to run this business
Hmm.
and take over the seller's role, whatever that role may be. I've
Yeah.
got the right background for it. I'm the right person. So that's really, really important. Outside of that, then they've got to be able to show that they can bring in some equity. Where's the equity going to come from? Is it coming from them personally, all their own money? Some banks only want that. That's all
Hmm.
they'll accept. Other banks will accept, well, I'm going to bring in some of my money and I've got these investors. And then we talk about, well, what kinds of investors?
I
Are we
love
talking
hearing that.
about?
I have investors. Don't worry about it. No, let's worry
Yeah,
about them.
yeah,
I
sure.
love
Yeah, but from my perspective, there are value add investors that can actually de-risk a deal.
it. Hmm.
If it's the right people with the right background, bringing in some of the money who are going to stay engaged post close with their investment, that can actually be lower risk than somebody just using all their own money and not having that additional team around them going forward. So, that matters. Where's the money coming from for the equity? And then how much equity? It's not as important how much equity, to be honest, to a lender as it is how much leverage relative to adjusted cash flow.
Hmm.
That's really the number that decides whether we have a lot of cushion or not enough cushion. So, if I'm a buyer and I'm willing to pay a 5x multiple because I found a great business, that's wonderful, but that may mean I have to bring in some more equity. So I keep the leverage down around three-ish, 3 turns of EBITDA or 3 turns of adjusted cash flow, because
Yeah.
that's about what a business can afford to
They
borrow.
can overpay as long as they get the multiple down. The part that's being financed, they can get that down to what the debt service can cover, if I'm hearing you correctly.
Exactly. So the lender doesn't really drive the price. Not really. They drive the amount of leverage relative to cash flow is kind of a stable number based on wherever interest rates are. I mean, it does move with interest rates,
Hmm.
but a buyer can pay more. They just have to come up with more equity.
It's interesting because we want that stamp of SBA pre-qualified on our listings, but any business could be SBA financeable if people just bring more money to the table. So maybe
Right.
we should look into our business owners that we know it's too rich for SBA to cover in full. Change the way we market them.
Right. If you've got a great business with the kinds of characteristics that truly should trade at a 5
Yeah,
multiple, that's fine, and I've got SBA deals that do that, but the buyers that buy those and use SBA are, they're the higher tier
yeah.
folks who have plenty of cash and experience. Usually, they've got a lot that they bring to the table, and that's the kind of buyer you might want for that business. Where if you're at a 4 or below, the average SBA buyer can qualify usually for that.
That's a good way of looking at it. And yeah, and that virtue of experience. I talked to a buyer yesterday, and she said, "This is going to be my first restaurant." And I said, "And I have the money." And I said, "Well, doesn't matter." And then she said, "I'm going to bring in a partner." And I said, "Does he have experience? Like, let's get to the experience piece
Yeah. Right.
because you got to have both,
Yeah.
right?"
Yeah.
So, um, well, the that notion of 3 or 4 or 5, I think what I'm hearing is it's not just what will the business get the business pre-qualified, but also the buyer. There are different. I think you used the word tiers of buyers.
Yeah.
Everybody's special, but some people may have a balance sheet that merits that the risk is less for the bank. Is probably a nicer way to
Yeah.
say it than a tier 1 buyer versus a
Yeah.
tier 3 buyer.
I think what we're in a really interesting point in the cycle of all these businesses being bought and sold, and
Mhm.
that we've got buyers now. At least I meet quite a few of them who already bought and sold a business. They're
Yeah.
still on the younger side. They want to still be in the game, but they've already had an exit and
Yeah.
they've got more cash and they want to come back in and they understand how to do a deal. They understand how to operate a company and how to raise debt and they don't usually raise outside equity, but they could. Um, those kinds of buyers are out there now, which I think is fantastic. You know, they can pick up and they know a good deal when they see it. They know a
Yeah.
quality company when they see
And
it.
they're savvy deal makers because they've seen the full cycle. I'm
Yep.
thinking of one in particular. Well, and this is
Mhm.
a good tie-in back to you and your experience at Live Oak that transferred over to Viso, and that's be, working with acquisition entrepreneurs, the searchers. We're seeing
Mhm.
more of those for sure. Talk to
Yeah.
me just about how, that whole phenomena that we're seeing. I wanted to get into like what's going on with SBA. That seems like something new to me. The more searchers, more acquisition
Yeah.
entrepreneurs. What's going on with that?
Well, I mean, funny you should ask. I just came back Sunday. This is Tuesday from Washington D.C. from one of those ETA conferences,
Yeah.
Entrepreneurship Through Acquisition. This particular one was at Georgetown University. So what's going on is this: the business schools are teaching in larger and larger numbers. Like schools are adding this to their program. They're teaching this course called Entrepreneurship Through Acquisition.
Hmm.
Some of the schools have been doing it for a long time, and some of the schools are newer to it. But these are all pretty elite business schools from Stanford, Harvard, Columbia, Yale. Like I mentioned, Georgetown. I'm not even mentioning half of them. There's so
Yeah.
many now. And so young folks are going through a and they're not always young, but they're going through a business school program. And they're sort of comparing going out in the corporate world with their MBA or becoming an entrepreneur in a way that feels a little safer, buying a business instead of having to come up, from zero, right, and start a business. So that's the phenomena, is that people really like that idea.
Yeah.
They that is very, very attractive. There's lots of how-to books and courses and free stuff all over the internet, sort of teaching folks how to do it. I think the problem for someone like you, for a business broker and for sellers, is that the number of buyers from that type of community has really grown rapidly. And so, like you said, you had, how did you say, 450 looking at one deal?
Yes.
Therein lies the problem. It's hard for them too. You know, they want to be successful and ultimately land something, and it's hard for the sell side to really screen out when there's that many potential
Oh,
buyers.
yeah.
Yeah, it's a huge problem. Yeah.
Yeah, I contend it's a lot harder to buy a business than to sell a business, and there's a lot of reasons for that. It's complicated process for both sides, but the buyers, and right now especially, that was unique. This is a unique. I wish all of our businesses that go live have that kind of interest. That's within 1 week we've had that kind of interest.
Yeah.
But even on a normal listing, we're getting 100 plus people raise their hand, and we'll put them through our processes, um, and they're going through processes with you as well. So but we're definitely seeing more of these searchers, and they all have slick websites, and it's hard for us. We have to do our diligence to figure out, like, do you have money? Do you have experience? We treat them the same as any other buyer, but we're certainly seeing more of these ETA
Yeah.
professionals.
Well,
So
speaking of that, I do want to say that is something that we're working on at Viso, is a better way to show that somebody can qualify. And what I mean by that is, we have our, templates and things that they've got to tell us about themselves,
yeah.
about their financials, and about the deal. And we are pre-qualifying their offer. So we're encouraging our clients to come to us and do all of that homework and show it to us, let us review it with them, and then we can provide them with something they can submit with their offers, not from one bank, but from Viso, saying, out of our 30 plus banks, we think there's about 10 that would lend the way this is structured, or there's only two, where we can actually give you some kind of numerical answer that gives you a feel for it. Like,
Yeah.
how tough is this one going to be, or
That's
how easy
interesting.
might this one be?
I love that. And I want to talk more about how Viso's kind of different. And I want to share a part of our processes. We call it a path to purchase.
Mm,
We always have buyers say, I love the business. Let me talk to the owner right away.
mm,
And we say, I'm glad you love the business. And a lot of people want to talk to the owner. Let's figure out how you're going to pay for the business. like I'll talk to you all day, but before we spend time with the business owner, who a lot of people want to talk to, let's figure out your path to purchase. And we ask them either show me the money, like Jerry Maguire, show me the money, or show us a letter from somebody who's
Mhm.
seen your money and has said you can consummate a deal of this value. So the tools that you're offering here is what brokers like me, intermediaries that are
Mhm.
representing sellers, definitely want to see. And I would contend, as a business buyer, you're probably in a better position if
Mhm.
Heather says the buyer's good for it versus you showing me your money.
Mhm.
Because I represent the seller, and if you come back later and say I can't afford it, I'm going to say, well, you already showed me that you had the money, so you know it's good. So you're part of the buy side deal team in this respect, and you can
Yeah.
offer value to your clients in this way.
Yeah, absolutely. And what's interesting about showing the money, just the cash, I from my perspective is this: I see people who have the cash to
Mm-hmm.
write the check for the whole business,
Mm-hmm.
and they are getting sometimes SBA loans.
Of
Why?
course,
Why
yeah,
do they do that? They want the leverage. They don't want to tie up all the cash in that. So even if they showed you all the money, almost every buyer out there is going to get an SBA loan.
yeah,
So what you really want to know is, can they?
yeah.
Can they get an SBA loan? How many lenders are going to be competing for this person's loan? And and does it have any weird characteristics that are going to slow us down, or is it going to be
Yeah.
something pretty clean and something that we can kind of move forward with?
Well, share a little bit more about these. I understand you have some software. You tell me more about how you guys approach this. I want to dig into Viso Business Capital a little bit more. So
Yeah.
you want to share
So
some of your systems and stuff?
yeah, we are excited that we are kind of moving off of sort of the dinosaur templates and PDFs and Excels into what we call deal advisor software. And so it's the same information that we're capturing, the same types of questions and models that we build, but it's in this TurboTax style input. Makes it really easy for the clients to make sure they didn't miss something and for us
Yeah,
to review it very easily. But it also just gives us a lot more capability to do things very efficiently. When we can
yeah,
pull it out of that software, we can actually set up the bank's pre-screen memo. And when we go to our banks, we actually know what they do and don't like because they fill out a very intensive survey about their credit box for us that we
yeah,
track. So what we're doing now with all this software is we're actually able to say, software, tell us which banks are the right fit credit box wise for this deal. And it spits out, these are the banks. We were kind of doing that in our head, but now we're able to kind of do it with less errors and not forget a bank. Oh, yeah, that bank likes deals in that area or that industry or whatever it may be. And it helps us be really efficient. So when a bank gets a deal from us, they already know that we matched it to them, that this is something that should fit in their credit box based on what they've told us.
well, that's great because if you're watching and you're thinking about doing SBA, I describe it sometimes as a financial colonoscopy, and it's not a pretty picture, but it can be the experience of buyers and candidly of the business owner because banks ask for a lot. So any technology or platforms that you can bring to streamline this, the number one bane of existence is, hey, you already asked me for that. Why do I have to go get that again? So
Oh man,
there's
it's
a lot of
so
room for technology to improve these processes.
that is what we're trying to do is reduce the repetitive requests.
Yeah.
And even before we started using our software, when our lenders would ask us for something we've already sent them, instead of answering them, I would just send them a link. Here, see, it's right there.
Yeah.
It's right here. And they got really good at not asking. After a while, they went, "Oh, I know it's there. Wait a minute, let me go look again."
And it's going to happen even if you have the best technology in the world. You have a whole team working, and it happens in my office too. We always say before we ask for this, can we make sure we didn't already ask our client for that? Because I hate to ask for it twice. It makes us look like, but it does happen sometimes. You
Yeah,
got a lot of deals going. Businesses are living, breathing things. Time
that's right.
marches on, and now we need a new P&L, a new balance sheet to match. But
Yep.
anything you can do to streamline that, I think with AI technology, all that stuff, it's going to get better and worse at the same time.
Yeah, right. We can't over automate. Like we're
Yeah,
working on some automations right now, and we're not just letting things send out automated.
yeah,
We're using it to tee things up for us so that we're not starting from a blank sheet of paper. We're starting from something that's kind of 80% done. I
yeah.
think that's a good way to start. But yeah, I think if we over automate, we could cause ourselves some problems too.
So we talked a little bit about some technologies that you guys use. We talked about your perspectives. I want to get into some of the more what's happening right now. We're in this election is starting to wind up, but if you're watching this, it's Q3. We're going into the end of this election year. Let's just talk about that for a little bit, without getting political. What do you see in the SBA market in relation to election cycles?
It's always interesting. I really think both political parties want to score points by supporting small business. It makes no sense for either side not to want to do that. So they
Mhm.
usually do, but obviously they usually have different approaches. What I think where we are right now with the SBA is the last administrator or the current administration, the Democrats, it took them a while, but they gave us that new SOP. So that was sort of their contribution. Like once we got our people in, I think it took them 3 years of the 4 that they had, and that's common when it's a new, it's a changeover, right? They just got in, and it takes them a long time. So if the Democrats get reelected, they'll probably continue. They'll probably give us a few more things that they didn't get into that new SOP, and it'll probably happen a little bit faster because their people will stay in the SBA. You won't have this complete turnover. And they have proposed a few things. Something I read the other day was expanding the number of credit availability. It sort of hinted at making the SBA a bit broader, but they didn't go into specifics.
Mhm.
If the other side gets in, you'd expect the same thing, a little bit of a delay. It would take a couple of years potentially
Mhm.
because they've got to appoint a new SBA administrator and they've got to decide what is the agenda that they think is the most supportive to small business and then try to get that all done, whether it's SOP things or legislative things that they would have to go through Congress for. And that's another thing is it depends on what the makeup of Congress is. We
Mm.
all want this 5 million limit to go to 10 million. We all want it.
Yes, heard a lot about
Um,
that.
yeah, and the problem is that it takes Congress. This is one of those things that it actually has to be approved by Congress,
Uh-huh.
and we've not been able to get much through that way in the last few years. So
Yeah.
I think after the election, we have to kind of see also what is the makeup of Congress to know what kinds of things might be able to get through. The reason this administration went through things in the SOP is that they knew they couldn't go for things that would require Congress. There wouldn't be
Mhm.
cooperation. So that'll be interesting to watch.
That's interesting. And the SOPs, I mean, everyone's just trying to figure out. I've seen a lot of webinars about people saying, "Oh, now you can do this, and this is the latest change." And that's an interesting perspective about how slow the government is and how that affects the rate of change when an administration changes.
Yeah, when the
What
new
about?
group comes in, you have to wait a while. They've got to get people in, and then they really have to decide what is it that they really want to do.
Yeah,
Yeah.
well, the capital gains thing. There's some noise about getting deals done due to changes in capital gains. Are you hearing any of that?
I feel like it happens every year in the fourth
Yeah,
quarter,
yeah.
regardless of whether it's an election year, but it does tend to heat up in election years. But what happens is that, one side will propose, well, we're going to increase taxes. And they usually like to say it's going to be the capital gains taxes that will increase. And so that makes sellers who are thinking about retiring think, wait, I better hurry up and sell this business before that tax rate increases so I
Hmm.
can get
Hmm.
more cash after the taxes. So what it tends to do is make sellers feel like they've got to close in this tax year,
Hmm.
even though it hasn't, the capital gains, there's nothing really that has changed yet. They're worried
Yeah,
that it will. And so that's good news. And it can be good for buyers because you have a very motivated seller at that point.
sure.
The bad news is some of those sellers will say, if it doesn't close by year end, the deal's off. And so
Yeah,
it puts this really heavy amount of pressure on the timing and the closing at year end. And I
yeah.
will tell anybody out there that's thinking about closing in Q4, it is the largest closing quarter of the year for all the banks.
Hmm.
Everybody's got different reasons for trying to close in a given year, and it all gets kind of squeezed into Q4. And it's really the banks just are they're at or above capacity. So
Yeah.
it's actually really hard to get a deal done quickly in Q4.
If you're watching this in September, you're not going to start a loan now and get it done this year. You're already
Not
into
happening.
next year. So it is the closing season. We're going into if you're in progress, let's get it closed this year.
Yep.
If you want to sell your business, it's not going to happen this year. So let's plan ahead. And so we go to
Mhm.
market. And actually, January, February tends to be the most busy season for business sellers to go to
Mhm.
market and for business buyers that are to get back from the Christmas break. And they're like, I can't work a W-2 anymore. I'm going to buy a business. So
Yeah,
now's the closing season, going into the closing season. And then January, it's, it kind of starts all over again.
exactly,
We see that.
exactly. And I think people underestimate how long it takes to close a deal.
Oh my gosh. Yeah.
Yeah. It takes longer than any of us really want it to. We would all like it to be shorter,
Yeah, you
but
can sell a house in 30, 60 days, but it's been the industry research is 7 to 9 months or a year for bigger deals. It's been that way forever. And
Mhm.
I heard somebody make a joke about how 40 years ago a toaster toasted bread at the same to take 6 seconds or whatever. Toasters haven't improved in speed, and neither has getting an SBA loan done. Like you think there'd be some technology to get this done faster, but I guess it's back
No.
to government.
No. Yeah, it's the government, and that's the other thing I like to share with people when they get frustrated by, like you described, the colonoscopy
Yeah,
process of it all. And sometimes the questions that are coming out of a lender or the things that they're concerned about don't feel like they make sense to the buyer. Like, why would they care so much about this or that? And I explain a lot of times it's compliance. So,
yeah,
that 75% guarantee and that SOP. By the
it's
way,
a
has anyone
government
ever
loan.
seen
Yeah,
if you ever tried to print out the SOP, this is not something you're ever going to read.
yeah,
It's gigantic and it's complicated. And so banks are a little more focused on compliance because that's 75% of their risk
yeah,
and interpreting the compliance. And, that becomes a little obscure sometimes. And it can be a little frustrating for the buyers and the sellers of
yeah.
like, why does the bank care so much about this? But it's usually compliance.
Yeah, I heard another joke where CPAs and SBA bankers are the original coders because you guys have to read the code, the IRS code, right?
And it's horrible. Whenever when I have a few people working at Viso and they've said, "Should I read the SOP?" And I said, "Absolutely not.
Yeah, yeah.
You will not understand what you're reading."
Right.
And thanks to AI, though, we actually now have little chat
Oh, that's great.
SBA bots that will actually help you find the answer to your question rather than go read the whole thing because it's really complicated.
We got a little bit more time, and this is the kind of the fun part, kind of into the special topics piece. I want to just ask you a few more questions. You mentioned working capital. It's
Mm.
just such a hot topic, and it comes up again and again. You mentioned, get it done early, but you also, I know you have this theory about like where to put the working capital. Does the seller give it up? Does the buyer borrow it? Does the buyer bring it in? So, like, how is that treated? How is working capital treated in reference of an SBA loan?
Yeah, and you know this well. A lot of sellers really don't like the idea of, wait a minute, you're going to pay me X for my business, but I have to leave you this much of my cash. That's really a tough thing for a lot of sellers.
Yeah.
Upmarket, bigger deals that are not SBA financed, it's kind of common for the sellers to understand that they're supposed to leave some working capital in. So what happens is you have these buyers in the SBA end of the market thinking, I want the seller to do that. I want that to be included. And as a lender, I like that. That's kind of nice and simple, right? We're going to get the working capital from the seller. It's part of the price. It's a little bit easier to handle. So, like from my perspective, if your seller is willing to do that and the price that you're paying makes sense to them to do that, great. That's wonderful. But a lot of buyers have learned that if they've got as they found a good business, they love the business, the seller just does not like that structure that
Yeah.
coming at it that way, then fine. Go ahead and buy it at a price that is okay for you, the buyer, to bring in the working capital, either from equity or from your term loan or a little combination of both. Now, that does require a little more sophisticated buyer, though. I will say that. They have to know what they're doing around calculating that.
Yes.
Right? They've got to not only know what the right amount is, but they've got to convince the lender and or have the equity to bring in to do that. So whatever they're bringing in, they sort of add that to the price that they've agreed to pay to the seller, and
Yeah.
that's their effective price. Is their effective price still a good multiple for what they're getting? If it is, green light, that's a good idea. That's
Yeah.
fine. Yeah.
And this is something that business owners are, it's the last thing that they're thinking about. They're not
Yeah.
thinking about debt service coverage. And then they're not thinking about, if I ask for a top multiple, where does the working capital come from? And if we throw it on top, our multiple essentially got bigger. So I understand why you say you can figure it out fast, figure it out in the beginning,
Yeah.
figure out if it can be financeable. And I see inventory, you mentioned inventory. I see inventory
Mm.
messing up deals all the time.
Oh.
We see owners that they buy it because it was on sale, or they've just always they feel safe having a lot of inventory. I sell so much because I always have it in stock. I hear these things, but when it's time to sell the business and we look at the cash flow and we look at the inventory, there's not a feasible solution to get the buyer into the cash flow and move the inventory.
No, and so it's almost like for me when I look at deals, if it's an inventory type of business where there's that's what they do, it's like an immediate yellow flag for me because I know there's a lot of hidden things in there. It's not just this inventory figure on a balance sheet. We have a lot of questions to ask. We need to understand the inventory management systems. Do they do a hard count? Is
Yeah,
the buyer going to do a hard count before close? We just closed a deal that had so many SKUs that the buyer paid a pretty penny to have a hard count done before close because it was just very costly to do it, but it was the
sure.
right way to do it, and we got that deal closed. It was a very nice deal, but it's like an immediate yellow flag. We have a lot to
Yeah.
learn when we've got a business that's focused on inventory.
And on a similar note, heavy equipment. What about the construction businesses? They've got yellow metal, rolling stock. They have these terms for all this stuff, but essentially, like you got to have all this heavy equipment to run your business, and it's always getting used up. How does that stuff factor in
Our
into these
favorite
numbers?
word, capex.
Yeah,
We can talk about maintenance capex, which means like how much, if you didn't grow, how much do you have to you still have to buy new trucks or fix the trucks or whatever it is. And let me tell you something about maintenance capex. Even the most sophisticated, smart people, it's always a guess.
yes,
Right? It's always a guess because there's no way we're going to know exactly what that stuff is going to cost every year on average. But that's what you're trying to figure out. You're sort of trying to come up with a number. You might add back depreciation, and then you've got to take out this maintenance capex. So EBITDA is not always the right number, because that's just adding back depreciation, but not taking out maintenance capex. So what I tell buyers is like rule of thumb it at first. If you see a really big depreciation number in there, and we know we have a lot of equipment,
yeah,
you can add it back, but take out at least half of it when you're
yeah.
first starting. You don't know, remove half of it as a deduction for maintenance capex, and then refine that number from there once you can do more diligence. But you can't just add back all that depreciation and expect it's not going to cost you anything because it's going to cost you something. And then there's also growth capex. So
Okay,
again, we talked about in the beginning, the buyer wants to buy something they can grow most of the time, right? That's
yeah,
what makes a good investment. So that means to grow is more expensive in that business,
yes, yeah.
right? So we have to, where's the capital going to come from if I want to grow this business? I have to, a big outlay of cash that has to happen first before I can grow. So they're good businesses, just got to come at them from a different perspective. And you have to be a little more conservative on the cash flow.
I could go down this road a lot farther. I'm really enjoying these tangents. I just remembered a story where I sold a 4 unit facility and the owner was closing one of the facilities. They had five. They closed one while I had it listed. And every time a buyer asked, well, what would it cost to reopen? And they're like, I don't know, half million, million if you really want to go crazy. And I'm
Yeah.
thinking, like, you're making my job really hard. I mean, this is all true. I'm glad that you're not lying,
Yeah.
but this is the reality of business growth. These owners had done that over time and built up this beautiful business, and one
Yeah.
was kind of senescing, just the natural order of things. But every business is at some state of growth, and if you want to push it farther, it definitely takes money.
Yep.
So I think that the takeaway is it's both an art and a science, and we're never
Hmm.
going to find the definitive word there. I did want to just leave a little time if you had anything that you wanted to share specifically about how people can reach you or events coming out, anything that you want to share. I just want to give you the floor before we wrap things up.
Yeah, thank you. Yeah, the best way to work with us is to start out by attending one of our Zoom sessions. Do it in fact, I did one this morning. I do it every 2 weeks. And my goal with those sessions is to answer every question somebody's going to have as a buyer about what it would take to get an SBA loan to buy a business. So I start everybody there. Go to my website, visocap, visocap.net, and you can sign up for the Zoom session there. And that's the best way to start. And then after that, we can do pre LOI, pre qualifications, like we talked about. We can give you access to our deal advisor software. And we really provide a lot of support while they're searching. So that they can put in good offers and be efficient, and we can get to know them through that process. That's a fun part of our job.
I love that. We talked about it. It's hard out there to buy a business, so you're going to need someone on your deal team that has been there, that has done it, and I couldn't think of a better person. Thank you so much for
Thank
joining
you.
me today, Heather. We'll put your contact information in the notes. And on behalf of Heather Endresen, this is Neal Isaacs, the Raleigh Business Broker, signing off. Thanks for watching.